What's good, everybody? Welcome to video 3 in the series that we're doing, which is called How to Fix My 400 Credit Score. So all of this series is basically trying to help you to improve your credit score no matter where your credit score is, and give you the steps that you need to help you to be in place to be able to buy that house that you might need, get that car you might need, get funding for your business if you need to do that. So it doesn't matter where you are, again, but every step that you take through the series will help get you in a better place and weed through all of the conflicting information that is out there online, or that you heard from your cousin Larry, your Uncle Elroy. So all of this is to help you out. Now, this video in particular is to show you guys what you need to do in order to build credit. So we're going to get into some of the details of that to make sure you're going in the right direction. You might think that it's as simple as going to my bank and getting something like a secured loan or something like that to start building my credit, or a secure credit card. No, it's not as simple as that. There's more that goes into it that you need to be thinking about before you start that process. Now, if you've been liking this series so far, make sure you give this video a thumbs up. Subscribe to the channel and turn on notifications so you'll be notified of any new video I drop, just like this one. And let's go ahead and get into the information. Now, first off, when you're trying to get any account to build credit, you need to be thinking about, okay, what bureaus does this account report to? Because you want to make sure that it's reporting to ideally all 3 bureaus, and at the very least 2 bureaus, because you never know what bureau a lender might check when you actually go to apply for the thing that you really want. So you want to make sure that all of those scores have been built up. And a lot of times people make the mistake of going to their local credit union or the small bank that they use, and those accounts may not report to all 3 bureaus because there is no uniformity as far as how accounts are reported. It's dependent upon that particular bank, that particular credit union, and most of the smaller places like banks, small banks and credit unions, they don't report to all 3 because it costs them money to do so. So that's the first thing that you want to be thinking about. Does this account report to all 3 or at least 2? Now, other than that, you also want to look at whether you want to try to get an account of your own. Some of you guys look into trade lines, and some of you guys also might want to be added as an authorized user on somebody else's credit card. Now, the first thing to know is that always the best way is going to be to get an account of your own, start building up your own credit, have an account that you have control over, because I've heard horror stories of people being added as an authorized user and seeing this effect as well, where they're added as an authorized user, they're trying to improve their credit, but the person whose account they're on has maxed out their card completely. And of course, you as the authorized user, you don't want to go pay down the balance, and you have to rely on telling that other person to do so, and they may or may not want to or be able to do that, and you just have to suffer until that changes. But if you have control over it, you have more power in being able to affect your score and get it to a good place in the time frame that you have. So the most ideal thing to do with an authorized trade line is, if you know somebody will not have that balance up and you need to add some age to your credit report, having somebody with an account in good standing, good payment history, extremely low balance utilization wise, and they also are gonna need to use that card for a while, and they most importantly have had the account for a long time, ideally maybe 7 years or 10 years. The thing that you really want to look at is it needs to be older than your credit history. Outside of that, there are trade lines. Now, trade lines are going to sound like the most ideal thing to people. You pay money for it. Somebody that you don't know adds you onto their credit card, usually with a high limit, low utilization, and on-time payments. That's not always the best situation, and a lot of the FICO credit scoring models now will not count anything like that, and you will be paying that money and it won't really help you because they know people do that, and that's not what they want the score to show off in helping you to get an account that you want to get, like a house or car. They want to know if you're really a risk or not, and they can't determine that based off of you having somebody else's account that you paid for on your credit report. So those ultimately can be iffy on if they're going to help you or not, and there are some other, shady things around it. So if I was you, I would stick to trying to build credit on my own by getting my own accounts, having control over what's going on, and knowing that the FICO scoring algorithm is going to include this in my credit when I go apply for what I need. Now, another option that people have to look at is loans versus credit cards. So once you've decided how you're going to get your account, then it's, do I get a loan or do I get a credit card, right? So ultimately, credit cards help people score more. Loans can help people as well if you have not had a loan before, because having different types of credit on your credit report helps your score. So if you haven't had a loan, getting one will definitely help you, but ultimately credit cards help more than loans. The reason for this is because credit cards never close unless you have like a retail card or something like that. Loans close every time you pay them off. If you might have heard that closing a credit card can hurt your score. Well, the same effect happens when you pay off a loan and that loan closes on your credit report. The credit cards stay open forever unless you close them. Again, unless they're retail and you haven't been using them and they close them for you. So that's a reason why credit cards are so good. They're always open and always available to use. And when they first hit your credit report, they show up as no money owed and you have a high limit available to you, which is better for the portion of your credit that calculates how much debt you have. Because with a loan, it first shows up as you owe all this money and it shows the original amount the loan was for. So it looks like you're in debt with the loan versus you have money available to you with the credit card. So ultimately, credit cards always help people more quickly and by a larger amount of points. From what I've seen, like I've seen a person get up to 90 points just from getting a credit card versus getting a loan. So again, that's what you want to choose in most instances for building credit purposes, credit cards over loans, unless you need to have a loan on your credit. Now, other than that, the next thing you need to be thinking about is, should you get secured or should you get unsecured? Does it matter? And before I get into that, I just want you to know, if you guys are at the point where you want some help with your credit and you don't want to do it on your own anymore, then you can set an appointment with my company down below in the description and use the promo code FIXMYSCORE400 to get a discount when you are on your consultation call. And you can get a discount on services for this month only. Again, enter that code when you set the appointment as a promo code, and you can take advantage of that discount while you're on your consultation call. So just wanted to let you guys know that if you need help. Now, getting back to secured versus unsecured. Now, secured just means that you put down a deposit before you get whatever type of credit that you want. A lot of credit unions do this. A lot of smaller banks do this to help people build credit. Now, the thing about this is the secured loan or the secured credit card is really in place to help the bank want to help you. So they think that you have a history, of course, of not paying people. So they want to get some money from you up front just so they can feel comfortable lending to you. Now, if you can get unsecured, it's always better to try for that first. In some instances, even with your score being low, you can still get approved for unsecured. So I always say try that option first so you don't have to tie up your money in trying to get a secured account, because it's not going to benefit your credit anymore to have secured. In most instances, it doesn't even say it on your credit report that it is secured. So literally, the benefit of secured is only for the bank so that they can feel comfortable in lending you anything to help you build credit. So there are, like I said, some options that you can use that are unsecured to start building your credit immediately with no credit check and all of that good stuff. And that's the next thing that you need to know about. And I'm going to show you what accounts you can use in this next video. So make sure that you do jump to the next video in the series. If you got value from this video so far, make sure that you do like this video, subscribe to the channel, turn on notifications, and I'll see you guys in the next video.